Hi there. After some crazy bloodbath, Cardano is up at around 14% today. It's time to look at it through the Wyckoff lens and see what the whales are doing and where its price is heading. If you're new to my session, I'll cover the Wyckoff stage, trend change potential, as well as key price levels. These are education content, not financial advice. The weekly chart of Cardano is basically showing us you can say a massive rebound of about 14.5%, but it still hasn't recovered, the drop from the previous days. The volume is significantly higher than the previous few weeks. Okay, if you look at this volume chart, it's almost double than the previous 2 months on average. So the key here is that it seems that there are quite a number of people that are willing to buy the dip. But the question is, during this paper hands, diamond hands test period, if the whales are going to push the price further down, are they going to become diamond hands and keep holding? I mean, the people that bought the dip over here. Because at this current point, the biggest source or biggest confidence that gives people to buy the dip, I believe, is what happened on October 10th, this massive drop over here. It ended at this red key level of 0.28. All right, that's why people are trying to buy, up to this point. You see this candle is currently the body is pulsing over here, but that's not the end of it. So if we look across, I shared previously, you see where the wick came down just like in the past few days to the blue key level of 0.223. That's where the second test landed back in 2023 June. Right? So I shared that during that accumulation cycle, the range between the blue key level of 223 to the purple key level of 258 was the range that the deeper test ended up at. So this may well be just the beginning of it. Even if it bounces up to challenge your green key level again, showing us a sign of strength, which is something that we need to see in order to confirm that the confidence is recovering. It doesn't mean that it won't come back down to this level once again. It's been proved back in 2023. All right, so that's the big picture. And let's go to the daily chart and see what's going to happen. Here, we see this like 6-7 days of red with a little bit of pause when the price got to the 0.280 red key level. What happened yesterday and today are basically balancing out. Some people got in, bought the dip very heavily today, not letting the price drop further down to 0.223. However, the surge today hasn't gone above the red key level. So these 4 dates here we talked about are 4 potential trend change confirmation dates, because the current trend, even with today's price rebound, is still well underneath the ceiling of the downtrend. So the 4th of February, that window is already missed. The next are the 15th, the 19th, and the 27th. So if the price comes back down to the purple and blue key level range, like I mentioned just now, we may have to wait till the end of the month to see this downtrend confirmation, whether it's over or is it still going to get rejected by the ceiling, like what happened back in the end of January, around the 28th, 29th, where the bears hit very hard to push it down to the next support level. So the next key support level below the blue key level is the 0.169, this light blue key level over here. Here, this level, if you look across, is below the 23 accumulation cycle. It's basically about the ceiling of the accumulation back in 2018 all the way into late 2020. Okay, so for the case of Cardano, it's not over yet like many other altcoins, because especially for Cardano is still in the early stage of accumulation. So expect more tests to come. If that happens, it shouldn't surprise you. If you're interested to access these sessions earlier, subscribe to the channel membership now. See you in the next video.